How many times have you watched a candle surge in one direction, felt that rush of adrenaline, clicked the button to join the move, and then immediately watched it collapse against you? It feels personal, doesn't it? It feels like the market was waiting for you to commit before it turned around. But I'm here to tell you, it wasn't personal. It was programmed. You didn't get unlucky, you got engineered. You stepped into a trap that plays out every single day on every single asset like clockwork. Welcome back to the process. Today we are stripping away the noise and focusing on the heartbeat of the daily range, the power of three. In the ICT world, we call this AMD, accumulation, manipulation, distribution. If you do not understand this cycle, you are the liquidity. You are the fuel the algorithm uses to go where it actually wants to go. Today we are going to fix your timing, we are going to fix your patience, and we are going to align your mind with the true open of the day. Breathe, focus, let's get to work. Let's start with a story that I know you've lived. Picture a trader named Mark. Mark opens his charts at 9 a.m. He sees the market has been drifting sideways all night. Suddenly, right around the opening bell, price starts ripping higher. Big, green, displacement candles. Mark thinks, this is it, this is the breakout. If I don't get in now, I miss the daily expansion. He buys. He feels good for about 3 minutes. Then the candles stall, wicks start forming on the tops. Slowly, painfully, price grinds back down to his entry and then through it. He moves his stop loss because he's sure it's bullish. It drops further, it sweeps the lows of the morning. Mark panics and sells to close his position at a loss. And the exact moment he sells, the price rockets higher, surpassing his original entry and hitting his original target without him. Mark is devastated. He thinks the market is broken. But Mark just traded the manipulation phase. He provided the liquidity for the smart money to buy. Here is the reality check. Professionals do not chase the first move. They anticipate the fake move. This is the essence of the power of three. Every single daily candle, if you look at it on a daily time frame, is composed of an open, a high, a low, and a close. But have you ever thought about how that candle is built? If we are expecting a bullish day, an expansion to the upside, the algorithm generally does not just open and go up. That is retail logic. Smart money logic works differently. Smart money needs to buy at a discount. They need to buy below the opening price. This brings us to the first phase, accumulation. Usually during the Asian session or early London, price ranges, it's quiet, it's building orders on both sides. It is inducing traders to put their stop losses above and below that tight range. This is the accumulation. It is potential energy waiting to be released. If you are trading heavy size here, you are gambling, you are guessing, the professional waits. Patience is not just waiting for a setup. Patience is waiting for the narrative to begin. Then comes the most dangerous and profitable phase, manipulation. This is the Judas swing. If the true bias for the day is bullish, the algorithm will first drive price aggressively lower. Why? 2 reasons. First, to trigger the sell stops of the impatient traders who went long early. Second, to trick breakout traders into thinking the trend is bearish, so they open short positions. This sudden drop creates a pool of liquidity. It offers smart money a deep discount price. While the retail crowd is panic selling or chasing the short, the smart money is accumulating long positions. They are buying your fear. This is the rule you must write down right now. If you are bullish, you want to see the price drop below the midnight opening price. You want to see it trade into a discount. You do not buy the green candle ripping high, you buy the red candle diving into a point of interest, an order block, or a fair value gap within a specific kill zone. You are buying when it feels scary. That is the nature of the professional mindset. You are doing the opposite of the herd. Once the manipulation is complete, once the lows are swept and the stops are triggered, we enter the third phase, distribution. This is the true move. This is where the expansion happens. Price reverses, reclaims the opening range, and expands toward the opposing liquidity pool. If you waited, if you sat on your hands during the fake out, this is your reward. The distribution phase is where the easy money is made, but you only get access to it if you survive the manipulation phase. Let's get technical for a moment, but keep it simple. I want you to focus on the midnight open, New York time. Put a horizontal line on your chart at the opening price of the euro candle. This line is your anchor. This is your fair value for the day. Above this line is a premium. Below this line is a discount. If you have a bullish bias, why on earth would you be buying when price is significantly above that line? You are paying a premium. You are chasing. You want to see price dip below that midnight open, maybe at 8:30 a.m. or 9:30 a.m.? That dip is not a crash, it is a gift. It is the slingshot being pulled back. Think of an archer. To shoot an arrow forward with power, you must first pull the string backward. The further back you pull, the more power you have. The manipulation leg, that drop down before the rise up, is the pulling of the string. The deeper the manipulation into a higher timeframe PD array, the more explosive the distribution will be. If you enter during the pullback, you are aligning yourself with the stored energy. If you enter after the arrow has already flown, you are just chasing the wind. But how do you know it's manipulation and not a real reversal? This is where your higher timeframe bias comes in. You cannot trade the power of 3 in a vacuum. You must know where the weekly and daily liquidity targets are. If the daily chart is bullish and price is reaching for an old high, then the intraday drop is likely manipulation. If you have no idea where the daily chart is going, you have no business looking at a 1-minute or 5-minute chart. Zoom out. Context is king. The pattern is just the trigger. The higher time frame is the bullet. I want to take a moment to do a guided visualization. I want you to rewire your brain for patience. If you are driving, keep your eyes open, but if you are safe, close them for a moment. Imagine it is 8:25 a.m. New York time. You are sitting at your desk, you have your coffee, you are calm, you see the midnight open line on your screen. Your bias is bullish. Suddenly, news drops at 8:30. The candles turn red. They start smashing down hard. Your heart rate wants to spike. The retail voice in your head screams, "The market is crashing. Sell." But you do nothing. You watch. You breathe. You see price hit a defined order block below the open. You see the wicks forming. You see the energy shift. You are the sniper in the grass. You are waiting for the target to stop moving. The candle closes. You execute. No fear. No hesitation. You are buying from the frantic sellers. Feel the power of that control. That is who you are becoming. Now, open your eyes. That feeling of control, that comes from understanding the narrative. When you understand AMD, you stop fearing volatility. You actually start to crave it. You need the volatility to push price into your entry zone. A flat market gives you nothing. A volatile market gives you opportunity, provided you know which side of the move is the fake out. Let's talk about the power of 3 in your own psychology. Accumulation is your preparation. It's your pre-market routine, your journaling, your level marking. Manipulation is your emotional battle, the urge to FOMO, the fear of missing out, the desire to revenge trade. You must survive this internal manipulation. Distribution is your execution, flawless, calm, according to plan. If you skip the preparation accumulation, you will fail the emotional battle, manipulation, and you will never see the profit. Here is the reset protocol for when you get caught on the wrong side. Because it will happen. You will misread the bias, you will buy the manipulation thinking it's the distribution. When you take that loss, here's what you do. Step 1. Stand up. Physically leave the screen. The algorithm works 24/7. You do not. Step 2. Ask yourself, did I buy in a premium or a discount relative to the opening range? Usually you bought in a premium. Step 3. Accept the data. The loss is just data telling you that your timing was off. It is not a reflection of your worth. Step 4. Wait for the next session. Do not try to make it back in the same dealing range. Let the dust settle. Your challenge for tomorrow is simple. I want you to put the midnight open, New York time, on your chart. Do not take a trade until price has crossed that line to the opposite side of your bias. If you are bullish, do not touch the buy button until price is below the midnight open. If you are bearish, do not touch the sell button until price is above it. If price just runs away without giving you that discount, you do nothing. You sit on your hands. You protect your capital. That is a win. Being flat is a position. Tomorrow we practice the art of the no trade. The market is designed to transfer money from the impatient to the patient. The power of 3 is the mechanism of that transfer. Are you going to be the liquidity, or are you going to be the smart money? The choice is made in the wait. It is made in the silence before the execution. Master the AMD cycle and you master the daily range. Stay disciplined, stick to your model. I'll see you in the next session.